Cleveland Cliffs. Is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. Cleveland Cliffs has great growth at 15.48% per year going forward. The company is looking towards expansion and its projected growth reflects that. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio to me is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. Cleveland Cliffs has a bad PE ratio of 36.4. There's just too much hype, especially recently, and not much in terms of hidden gems. Dividends should be an obvious metric and something a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating. You're not investing. Cleveland Cliffs pays no dividend. A company growing this much probably wants to use most of its resources on acquisitions and expansions. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. Cleveland Cliffs has bad management with an ROE of 3%. This isn't good because your investment would mostly be wasted. Free cash flow is my way to quickly evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up other companies, the better to research, and more money for marketing. Cleveland Cliffs has low cash flow to the tune of $1.48 billion. That may sound like a lot, but when it comes to creating an economic moat, that's just not enough to expand and conquer. Okay, as I said, these 5 metrics we just went over tell me what kind of business we're dealing with. With a business grade of 41, we're dealing with a lackluster business. We have growth coming in, but not much else in terms of fundamentals. But before we get our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, we know what kind of business we have, but let's see what the price tells us in terms of attractiveness. Nevertheless, Cleveland Cliffs is worth $20 per share. Right now, we're looking at a very undervalued stock. The stock looks very attractive right now, and this would be the time to buy. And now that we've got all the numbers down, we put it all together and get our final grade. Cleveland Cliffs has a final grade of 47, and that makes it a below average long-term investment. For me, I see growth, and we have an undervalued stock, but the rest of it isn't that great. But hey, after this video comes out, anything can happen in the next few days, weeks, months, even years. But long-term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.